Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 27th of April. All right. Now, once again, as you'd expect, a little relief rally in the equity markets, and then boom, they get clobbered again. Now, I'm telling you, you haven't seen an interest rate cycle like the Fed's going to go on since the 80s, right? So this is going to be a continuous sea of red. You'll have the old blue day where it goes up, but generally speaking, these things could be down 40%, pretty quickly. So don't get yourself all excited about a big change in the dollar or a change in the value of the equities, because they are under the pump. Now, what we are seeing just at the moment, I know we're in the Asian session, and the North American session's closed, and we have seen a bit of a relief rally here in the US equity futures, suggesting a bit of a recovery in those falls yesterday. I mean, down almost 4% for some of this stuff is pretty massive. So you'd expect some sort of relief rally. Sterling, Aussie, Kiwi leading the charge. And so a bit of discombobulation here, because there's a few other things going on, right? And if I just give you a look at the data now, the US durable goods numbers, okay, coming in much better than the prior numbers, okay, 0.8, 1.1. Consumer confidence, well, that's sort of going all right. Case-Shiller's up. It's one of those things where you get all these contributing numbers which are positive, which it keeps the US economy on track. But most importantly, it keeps the Fed on track for their plan of raising rates. Now, I sort of overshadowed this the other day, and I was talking about the numbers that are coming out. Aussie CPI numbers. Now, there's an election scheduled for Australia in May. RBA won't be doing anything till after the election. And I thought, well, that doesn't mean much. What we have seen, though, is numbers here starting to really come through the roof. Like every central bank is experiencing the same things, uncontrollable inflation. Now, this is like jumping up pretty aggressively, just like the US did. So once the election result is known, I'd expect the RBA to be on the front foot and do something from there. Now, why don't they do anything before the election? Well, it's always been construed, or the thinking was, you can't be biased. If they raise rates just before an election, it's not good for the incumbent government, and the other opposition can use it as cannon fodder. And if they don't do anything, then it looks like they're being favourites, right? So political favouritism. So they sort of keep that under check. Now, key numbers here, the RBA numbers, like once again, bigger than the prior numbers. So that gives the Aussie an underlying boost. But I'll show you what, the trend for the dollar, if I just come back to the overall theme in the markets themselves, like the dollar itself is going up, right? That's the trend, right? So this short-term little blip in the US futures, equity futures, right, producing a bit of a risk-on appetite, where sterling, euro, sterling, Aussie, Kiwi should go up. I think that's going to be short-lived, but the Aussie strong CPI numbers gives it a bit more of a thrust to the top side. And if you have a look here, it's up like 0.5% compared to hardly any movement here in the euro, sterling, and Kiwi, right? And actually, you know what? Across the whole board here, it's like, besides the yen, these things aren't really moving at the moment, right? You got to wait for the North American or European and North American sessions to come in. Now, one thing to debunk a bit of theory I keep having is, okay, and I know they're off a bit, but the overriding theme, you'd think the cryptos will be following the big move in the US equities. Well, they've actually debunked that today, but we'll see how that continues to play out. It's something I'll keep mentioning just to see if there's any sort of serious correlations there. Now, just give you a quick look at the charts. I've updated a bunch of things here. Obviously, the dollar index heading topside, and that the euro should be the complete opposite picture. I think we're just going to see this thing down towards parity pretty shortly. Gold, well, I'll tell you what, it looks like it's found a bit of a base and feels very comfortable down here. If anything, waiting for that next key release. But to me, technically, it looks like it's broken down, whereas oil is sort of back in the range again. No one's really messing with that. This is what I was talking about yesterday. These rallies here in the equity markets, most likely short-lived. And so you come back, see some stops trigger on the top side, and then down they go. And there's Bitcoin as well, following that overriding move. I know on the day here, It's a little bit different, but that's what's happening. And the commodity index, well, it's found a bit of a base around that support line down around 4,400, but really still under pressure, and that's putting pressure on the Aussie, Kiwi, and CAD. Now, I can't see any changes in that profile just for the moment, especially with China slowing down, the pandemic sort of blowing up over there. It doesn't bode well for production, and that's all about the commodities. So just on the currencies, you can see here all the dollar pairs, like dollar yen is the odd one out now. It's just having a bit of a breather, but the dollar generally going up and against everything. And that means euro, sterling, Aussie, and Kiwi going down. Aussie just coming back to test that resistance line after those strong CPI numbers. But I think once we get into that North America session, dollar kicks into gear with strong data. Well, the Aussie's going to go back down. It's almost a chance to get short at better levels. So that's where we are at the moment. It's very interesting, right? The story around not just the Fed, but all the central banks will be playing out very aggressively. Inflation everywhere, as I said, going mental. Just keep an eye on the key numbers, right? Like you're looking for so the GfK consumer sentiment numbers, like weak numbers here fits into the profile of euro going down. I like the idea of that. And well, then you've got a couple of numbers here out of the US, but not a lot on offer at the moment. So what I would be doing for the next sort of 24 hours is keeping a close eye on the US equities, how they open. Obviously, you're going to get a bit of an indication here from the US equity futures. They are up a fraction compared to how hard they got hit. But once you start to see what those equity markets are doing, right? See if you start to see the profile here of a risk on, risk off profile. What that does is it gives you more confidence to get into the trade. Like if US equities go down, euro, sterling, Aussie, Kiwi should be falling. If they do, you feel more confident to go with the move. And if you've got some technical levels in there, then all the better. Outside of that, keep an eye on, there's plenty of volatility around on the commodities, safe havens, oil's doing bits and pieces. I'll tell you what, Chevron was always a good sell. It was up like 60%, I think, like about a month or two ago, the shares. Amazing. And that's pretty much it. So last week of the month, lots of rocket and roll. There's data coming out here all over the place. Plenty of opportunities as we wait for really that first week of the month, or the first 2 weeks is where we get some serious direction. We're going to have the Fed going nuts on rates. Just try and keep up to speed with what's going on in the market. You know, if you are trading without getting your finger on the pulse here around the key releases, then you are missing the a bit of the real sort of directional force as to why the equities are going down, why currencies are going up and down, and why the bond market's moving, etc. But anyway, you can only do so much. So anyway, guys, have a good one. This volatility is something that's very regular in the markets of the past era, right? I know for the last eon, we've had really subdued volatility. Well, we're starting to see markets come back into a normal sort of volatility range, and that's great for trading. So don't think it's a concern. It's actually really good. All right, guys, have a good one. All the best. Cheerio.